Good morning. This is Tom Alexander. It is Sunday, July 31st. It's about 9:48 a.m. Eastern Time. I am out of my office. I am traveling. I am in beautiful Atlanta, Georgia, visiting my daughter, one of my daughters. So this is the video portion of the weekend report. We have a lot to cover this weekend. To me, this is a fascinating market. This is what makes it fun to be a be a trader in my mind. So let's take a look at some charts here. Let me get them ready. Okay, and I'll show you my screen. Okay, here are the four primary U.S. trading indices: the S&P, the Dow, the NDX, and the Russell. And as you can see, we have reached, and in the case of the NDX, exceeded important key reference areas. These are areas that have been highlighted for, well, a couple of months now. And we have traded right up into these areas, and we have done so on very, very strong breadth. I encourage you to go back and look at the reports from the prior couple of weeks. And I think those reports were a pretty good guideline to the possibilities that this might happen. All the pieces that needed to happen for this to occur fell into place. We've had this expansion in breadth. We've had breadth behave differently than it has behaved since the January top, and that's where we are. Now let's look at some things, because what you're going to see now, you're going to have all the people that try to make a living predicting markets that don't actually trade, calling a top and making all these, wild, crazy predictions, new lows, new highs, whatever. I don't know. You can't know. I don't care what method of analysis. If you're intellectually honest, you can't know exactly what's going to happen here. However, we are at an inflection point from an auction market perspective, and these inflection points have a very high probability of generating sharp moves eventually away from them. We've traded up into these inflection points. They could emphasis could be resistance. I don't like to use the term support and resistance because it puts something in your mind that may not come to pass, and you can develop bad trading habits. So what you want to do in this area is be flexible. Now we've had a huge expansion. We've had a lot of momentum to the upside. It wouldn't be shocking to see some sort of retracement. The best general guideline I can give, and this is especially true in a bull trend, is that when you are in a strong bull trend, and you can go back and you can validate this yourself, especially in the Psychonex futures, when you're in a bull trend, the previous cash session, let's use cash session here for consistency, the previous day's low or the day before that's low should hold. That should be the most retracement you get. And it's typically the most retracement you will get in a bull leg until that leg is complete. So what that means is that the area of Friday's cash session low, and let's throw in for fun the cash session close of Thursday, because there's a gap, at least in the ES, the NDX. There was not in the Russell, there was not in the Dow. So as we come into Monday of the cash session, who knows what's going to happen in Globex, then we're looking for Friday's low to hold under a bullish scenario, or worst case, Thursday's low to hold. If for some reason all of the indices reverse where we are and all four close below last Thursday's low, then it dramatically increases the probability that a top of some relative significance is in place. Otherwise, another scenario is the market just continues to accelerate higher. That could happen. So that's certainly on the table. And another scenario is that the trend continues higher, but it begins to grind a little bit. So let's take a look at some other stuff in here. Let's look at the technical situation. Now, the 10-day moving average, this is the Breathwork that I share with you guys week after week. And again, it would be really helpful and a great lesson if you go back and you look at previous reports and listen to the videos and you follow what I was saying about this stuff before it happened. It's uncanny. It's the greatest roadmap in the world. I'm a trader, so I try to not predict, because when I make a prediction, it messes up my trading. So I just try to follow the market and deal in probabilities. So with the momentum this high, the probabilities are, even if we have a short-term top, that we're going to see higher prices and we're not going to have this imminent collapse. Now, we are as extreme by some measures in breadth as we have been in a couple of years. You can go back and you can see the times off the 2020 low where we have reached this extreme. And again, I don't know if we're in a bull market. I don't know if we're in a bear market. If this is a kickoff, if the bear market low is in, or if that's a correction low within an ongoing bull market, then we're likely to see the bullish scenario, which is this market goes a lot higher before there's any significant retracement. And an example of that situation is back here in early January 2019, following that December waterfall decline into the low around the 26th, into and through Christmas, and then the market just took off. We reached this extreme reading in breadth. But as you can see, the market traded a lot higher before there was anything resembling a substantial correction. Now, I don't know if that's where we are. I'm just pointing out that you can't assume just because, we've reached this extreme, this 10-day extreme in breadth that, okay, the party's over here. Now, that said, if you look at the previous times we've reached this extreme following the March 2020 low, there have been almost immediate slowing of trends or relatively minor retracements. And of course, we had sort of the blow-off situation into the January top. So we're going to find out if it's different this time or not. And I will point out that this is particularly interesting because not only do we have an extreme in some of these technical readings, we have the market having reached a key reference area, a very important key reference area right here. So this is where we are as we head into the cash session on Monday. And it's going to be interesting. We'll see what happens. As I put in the report, be flexible. I'm flexible. I want to see what's going to happen. Of course, we don't have the benefit of Globex yet, but Globex could give us a clue about what's going to happen. So we shall see. Couple of other things I want to point out. Since we're on the technical side, I'll move here. So this is essentially a cash session chart of the S&P mini futures contract. So it's cash hours. And you can see we have rallied up into this key reference area. And the magnitude of this rally is very similar. It's almost identical to the magnitude of the greatest rally that we've had since the January top that began back in March. And that rally carried about 11.6%. We're about 11.2% now. As you can see on this screen, this is a 30-minute chart. There's a little bit of a divergence heading into this, but now caution warning, these divergences in these bull trends can persist. I mean, we could have a minor weak opening on Monday and you have breadth negative 1,000, and that might actually be bullish, but that's something we will be covering live in real time in the live trading. There's no way to predict exactly what's going to happen there, but there are certain things that you look for in this price breadth work that can give you really, really great clues when you're trading intraday, and we do use it very actively during the trading day. It's market-based information. It's not magic, oscillators, overbought, oversold, any of this other nonsense. So the symmetry of where we are is rather compelling, both from a technical perspective as well as an auction market / market profile perspective. Now let's take a look at the profile perspective. And once again, please go look at past reports. Every week in the report, I put a very simple schematic of the two possible paths of development for the market. Market profile has become one of the, it's been hijacked and turned into magic. There's nothing magic about a market profile graph. It is a tool that helps us to determine market condition, nothing more, nothing less. There's nothing magical about it. Nothing has to happen based on what you see on a market profile chart. It does help us to identify the volume nodes on the horizontal scale, which clearly you can identify this on a bar chart too, but this is a volume node right in here. It's very clear. And we have traded up into that as of the close on Friday. And you can also see, and I put this in the report, it's possible that if we stop in here, we could develop balancing here, or we could go all the way up into, screen is stuck, bear with me, I'll unstick it. We could go all the way up into this area right in here without much of a retracement. And that's around 4,300, frankly. The next big round number, we're at 4,130. So everybody's going to be looking at 4,200 just because it's the big round number. But from an auction market perspective, there's really, if you get above 4,200, then you're looking at maybe 4,300. So we'll see what happens. Guys, do me a huge favor. If you find value in the video, please like it and subscribe to the channel. You can hit the notification bell and you will be notified when I do these things. Have a wonderful rest of your weekend, and I will speak with you all soon.